what is the position on the consumer price index, the inflation particularly, which has been kept very much below and under control. So technically you would know between 2.5 to 3 to about 4 is the bandwidth which all of us are normally considered safe, because we've kept a top limit of 4. But between 3 and 6 would be any time better. But even then, the inflation has always been held well before under 4. So one of the very strong indicator for an economy is the level to which the inflation has been held. So that is the first slide. And the second one also tells you about the flow with which it went. Moving over to the industrial production. In spite of all the worries that industrial production indicators showed in the fourth quarter of 18-19, because it reached a level which was fairly concerning most of us, we see a clear sign of revival in the first quarter of 19-20 and on the second quarter, not really the second quarter, but up to July end. So that straight arrow explains that the revival signs are very, very consistent. Then that is also shown in the core industries. The July figures, which were released only a couple of days ago, probably would explain that. The revival of fixed investment is also very clearly showing a positive picture. Between 17-18 and 18-19, if you compare year on year, the annual fixed investment rate as a percentage of GDP, you can see the bar chart there. And also for the quarter-wise fixed investment rate is going upwards. And you can see that it is in the first quarter, 19-20, shown a clear, distinct, positive upward growth. Then we move over to the fiscal deficit and contained CAD. The fiscal deficit to GDP ratio, which was well known from the time the July budget was presented. And we've kept up the figures. The current account deficit, of course, shows a bit of a hike in 18-19, but that is the background for one of the indicators of the macroeconomic factors. Then you go over to the Fdi flows, on which there has been a lot of discussion. We can very clearly see that the numbers between, if you compare between 14-15 going upward, 15-16, 16-17 and so on, you can see between 18-19 and 19-20 as of now, there is a clear sign of revival. And the reserves, of course, particularly at August end, has really gone up, as a result of which we have one of the best level of reserve which is being maintained now. I'll quickly move over, as I said earlier, on what are the kind of follow-up we've made on the announcements that we've made twice before. Announcements were made on 23rd August and again on the 30th of August regarding series of measures that we took. I had reported implementation of 6 of the 32 announcements relating essentially to banking. That was on 23rd August. The partial credit guarantee scheme for banks to buy assets of NBFCs has been implemented. There are several NBFCs who have already benefited. We'll be probably giving you a more detailed picture as we go along, if not today, some other time, but the NBFCs are really receiving the benefits of that partial credit guarantee scheme that was announced. Then there is definitely an increased and improved credit outflows from banks. The transmission of interest rate cuts are being affected by banks also. Just for your information, at this stage, I would like to tell you that on 19th of September, a day before the GST Council's meeting, I shall be meeting with all the PSB heads and talking to them in detail about how the credit flow system is going on, post our announcing partial credit guarantee scheme, and post our infusing more money into the banks. So on the 19th, specifically for this particular agenda, I shall be meeting up with the chiefs of the public sector banks.